Welcome back to another Hedera DeFi Corner where we get into everything Hedera DeFi. I will say before we get started that we're going to be talking about tokens. We're going to be talking about yield opportunities, different DeFi strategies. None of this is financial advice. Use it for entertainment or educational purposes only. Also, understand the risks that are involved with getting involved with DeFi, and also what your local laws and regulations are in your local jurisdiction. But with all that out of the way, Brady, welcome back. I know you've been flying around recently. What have you been doing in your travels?
Yeah, I've been traveling a little bit. I went back home. I grew up in Arizona, so I was visiting family for about a week and a half. And then, our Bonzo Finance Labs organization is based out in Dubai, and my co-founder is out there. So I was visiting him for some quarterly planning, but excited to be back and jump into the routine of this. Yeah.
A lot of news going on in Dubai. I'm working on a token that might be focused in Dubai. I also we had the Trust ID or ID Trust going on with BIA. Just exciting stuff in that region in general. But let's get into some of the DeFi stuff that's going on. First, we haven't talked since the major liquidation event that took place just over a week ago. How did everything hold up in the Hedera ecosystem, and what were your general thoughts?
Yeah, extreme scenario of an event, that wasn't just a Hedera situation, but industry wide. Still a lot of rumors circulating on exactly what the catalyst of that was. There was obviously some like geopolitical turmoil at the very beginning of it that dropped things, but then ultimately some rumors talking about potential mishaps on Binance's centralized exchange and their APIs, other rumors with regards to potential implosion of like a large funds or market makers. I think it's one of those things that we won't know the full story of it for a while now, but a very aggressive event with a massive whipsaw that we saw of pretty much every single token that exists out there, especially within the top 100, even Bitcoin and Ethereum, but a little bit less so. I know a lot of people that kind of didn't realize if they were just outside of the industry looking at either of those tokens, thinking it wasn't really that big of an event. But anybody who's been in it, and especially those who are trading altcoins and watching the charts a little bit more closely, saw pretty how aggressive that was. And obviously, with an event like that, where for HBAR, for example, the price was sitting at around 21 cents and it dropped down, in some markets to 8 cents over a period of less than 30 minutes and then sharply recovered. There's going to be impact that takes place on any kind of DeFi or even centralized financial platform whereby market prices dictate the activities of the platform. So lending obviously in particular was impacted by that, and then also perpetuals being heavily impacted like by that. From Bonzo Finance's perspective, we were very responsive from the minute that that event started taking place in monitoring all of the activities within the protocol and its operations. Everything throughout the event, the operations of the protocol worked perfectly. The protocol itself was able to, along with its partners, liquidation bot operators, efficiently liquidate positions throughout the event. There were no bad debt incidences for the protocol. So that means that suppliers of liquidity within the protocol continue to remain solvent in terms of accumulation again of that bad debt that would result in a negative balance. What was interesting too is that that's ecosystem wide again. So like from Aave's perspective, Aave had about $180 million in liquidations. For reference, they obviously have a much larger total value locked and larger amount of borrows that are taking place across all of the chains that they support than Bonzo Finance on Hedera. They are based on the same technology. Bonzo Finance is based on Aave. And then for Bonzo Finance in particular, it was about 120 liquidations that resulted in $1.47 million that was liquidated. So incredibly unfortunate event. Obviously, the opportunity there for bad things to go wrong when you have such a dramatic change is strong, but the protocol was able to survive through that. And we actually, on our recent Bonzo Byte Spaces, Orbit joined us. This is the sort of advanced DeFi trading platform on Hedera, and they had some really interesting insights too with regards to some of the things that they saw with limit orders and other automated orders during a time where prices were changing so extremely. So yeah, we're happy to have made it through that most extreme stress test that probably the protocol could have gone through.
Well, that's all you can really expect. That was an extreme event, but we are going to have those kind of liquidation events happen. And as long as everything works as designed, I would say the protocol has lived up to what it's supposed to do. You know, we can expect in those kind of situations where the mark or the price moves significantly, you're going to get liquidations. That means there's going to be selling of collateral, which is often in the form of crypto. And at that point, you've moved away from where the market was trading. So it's very thin. The market's going to essentially overreact. There's not a lot of trading that's taking place between that 8 and 12 cents or 8 and 15 cents, but it looks like there is because it's moving through all of those prices. But at any given individual price, there's not a lot of actual buying or selling. The one thing you really do have to understand, no matter what tools you're using in the space, how it's structured and how it works. I heard something again talking in a space this week about how somebody had put a stop loss in, and they put it in, we'll say at 16 cents or something like that. And they ended up selling significantly below that. That's because there's other people that may have put stop loss orders in before you that have precedence. They're still going to sell even if there's not enough volume to sell. So it's still going to try to get you out regardless because, let's hope we can get a good price here. But that can cause things that people don't expect. They think there's no way I can get out any lower than 16 cents, but that may not be the case depending on how everything is structured. So again, those kind of things happen. It can be opportunities for some people. Of course, it can be very negative for others, but it's just something that we have to deal with and prepare for. So
no doubt. There
go
was
ahead.
also one instance that I think was interesting. We talked a little bit about this on Bonzo Bytes as well, and we'll actually dive into it as a topic on this show related to stablecoins. And the macro wide impact on stablecoins, which again, these protocols in DeFi are reliant on. There's a sort of interdependency with prices on centralized venues, decentralized venues. Basically, oracles are trying to take in price feeds from a number of different sources, and then the protocols rely on a price that is dictated by the oracle that's supposed to be a very true or accurate price. With the amount of selling that took place, it's essentially a swapping of a number of these volatile assets into stable coins. And, as mature as the industry feels like we've gotten to, we still saw such a huge increase in price of stable assets that are supposed to be pegged to a dollar. And just another thing that's notable is, and another maybe sign for us to like point to that says like this industry is still so early, the fact that there was enough, there was such a finite amount of stablecoin liquidity that the volume of trading into stables caused, USDC, for example, to jump up by 20% and remain there for a while. It was very interesting.
Depeg it in a way, in the opposite way that we often think of. So,
Yeah.
Brady, I do want to get into some of the other stuff that's going on in the retail side of DeFi. Starting off with SaucerSwap, obviously this show is brought to you by Bonzo Finance and SaucerSwap, and they have some really fun stuff that's going on. Number one, I'll say, and this is the latest news that came out, is they've reduced their interface fee from 0.4% to 0.25%. I like this, even though, of course, I'm part of the SaucerSwap team. I like the competition around fees. That's only good for the users. The interface fee is on top of the smart contract fee, we'll say, which is 0.3%. Now, the vast majority of that goes to the liquidity providers, but anybody can use the underlying primitive of SaucerSwap. So you talked about Orbit. They use it as well. We have aggregators like Ediswap, and we have other teams that are looking at leveraging the SaucerSwap primitive, the underlying layer, and they're going to decide whatever their interface fee is going to be as well. And a lot of them were choosing 0.3%, so below where SaucerSwap was, and now here's SaucerSwap going a little bit below them. So I like this kind of competition, even though they're all using SaucerSwap. They also have that interface fee, and then you have to compete with the different kinds of interfaces as well. They might have Orbit has limit orders. SaucerSwap hasn't integrated that yet. They're going to have it here coming up. Then SaucerSwap now has their app that has come out. Now, this is just the beta app. You have to use TestFlight, but it is on mainnet. So if you're making trades through this app, you are actually trading real cryptocurrency back and forth. Brady, I had a good time using it so far. All you can do right now is trade and single side liquidity, provide for single sided liquidity. I think it's clean. I think it's easy to use. I think it's a good onboarding mechanism. I did come up with a guide because it's not quite as easy right now to onboard as it will be once it's in the app stores, but it's a fairly easy process. But if anybody is having any issues with getting involved, you can go ahead and check my X account, scroll down a little bit, and you'll see that guide. I probably should put it on YouTube so people can access it a little bit more easily. But Brady, have you tried the beta version out yet? And what are your thoughts if you have?
Yeah, I've tried it out. I really appreciate it and enjoy it. Super smooth, very clean and exciting interface. And it sounds like they're also doing, well, you guys are doing a bounty program too for anybody who finds bugs. They can report those. I think that's a great way to do it. Reward people in the beta phase for finding any issues before rolling it out live. And then I'm an iOS user, but Android, it looks like that's coming within 3 to 4 weeks. Sounds about right. So yes, that should be great. I think it's going to be, it's very similar to like Uniswap. Uniswap has a wallet application, and then maybe in the future too, I could totally see the connectivity between this application and other applications within the ecosystem. It seems like there's a lot of opportunity on the SaucerSwap side having a homegrown app.
Yeah, absolutely. So now I'm going to shift here a little bit. We're going to get at the crossroads of TradFi and DeFi, starting off with Swarm. So, working with SaucerSwap, we're trying to expand the amount of assets that you have access to. We have Web3 pretty well covered. We're bridging more assets from other ecosystems over, but we also want the degens out there not to have to leave SaucerSwap if they want to get access to equities, stocks, bonds, precious metals, even venture capital we're looking at. And one of the teams that's really opened my eyes around the possibility around this is Swarm. They're starting off with stocks like Tesla and Apple. We're talking to them about getting like a broad-based ETF, so like an SPY or a VT, so people could just start to get access. I had some conversations with some people that are in our space, younger people, but they only deal with crypto. They don't have brokerage accounts, nothing. But they are interested in other kinds of investing. So we want them to have access to those things within the Hedera ecosystem. And the conversation I had around Swarm, one of the first things, and I thought this was going to be something that was a little bit too early to try to figure out, but I asked the Swarm team, how are you going to deal with dividends? We know that Apple has a dividend. I know the SPY has a dividend because it's just representing the S&P 500. Can you handle those distributions? And they said, absolutely, we could do that. Now, I haven't gotten into how they can do that, but that's one of the things that I thought was going to be a barrier is people were going to think, hey, I can't get access to the dividend. I am going to open up a brokerage account, or I'm going to go to my brokerage account and use that for my stock trading. But if we can offer those dividends as well, it's absolutely huge. Another thing that, I was talking to you about, I can't give all the details around it, but I'm really excited for it for the Hedera ecosystem. And I would say it's kind of a venture play because it is a very early stage company, fantastic technology, but it's actually going to be in a security in the form of a rev share token. A lot of people know about rev share tokens or rev share securities around real estate, and it happens a lot with oil. Well, this is a different animal, but at the same time, they're projected to have significant revenues. So we want to do this rev share token. And same thing, you're going to have to distribute those shared revenues with all of the token holders. And again, if Swarm has already figured out how to do this, that's absolutely invaluable and gives people access to venture capital that never would have had access to things like that in the past. So I'm really excited about what we're seeing there. Do you have any thoughts on that before we move on to the next thing with YieldFX?
Yeah, I think it's a realization of the promise of DeFi for the longest time now. And so we're starting to see industry wide players that come in that are acting as asset issuers for real world assets and having all of the components that we believe are going to be needed in the future of DeFi to be able to have permissionless tokens that are traded, are used in liquidity pools, used across different DeFi protocols. We have the same kind of flexibility maybe that we have today with crypto assets, where you can hold it in a wallet, and once your account is in the system, being able to transact sort of wherever you need that supports those assets or liquidity pools with those assets. And it does seem like a sort of garden, like a walled garden is forming for, what could be the future of finance in a more DeFi related way. And so, I know Swarm is, and many other platforms are acting as a token issuance platform. What I really want to see is, who are the players that are going to come in that act as the venues for trade, or the ones that are going to take the step to getting liquidity pools live that support these assets, and their unique standards and abide by all of the various sort of technical components that have been set up. Maybe it's a little bit more permissioned, like the account has to have been KYC'd by the issuer in order to utilize the pools. But it feels like we're on the cusp of that promise of DeFi for real world or traditional finance sort of being realized. And the next, 5 years to 10 years are, that foundation's being laid. So it's exciting. It's
It
cool.
is it is exciting. So the next thing we're going to jump into, this just came out on Thursday around YieldFX. I have my thoughts around it, but I wanted to see what your take was.
Yeah, I've always thought that stablecoin trading, Forex on a network like Hedera is very opportune. So the fair ordering of transactions, the high throughput, the low fees, everything that comes with Hedera, a lack of MEV, makes it really ripe for being able to host a Forex type platform, especially with HTS assets too. I'm not fully certain whether these Forex tokens are going to be HTS based, but I would assume or hope so, just given the degree of flexibility that HTS offers and the speed of throughput and everything else. So it's cool to see. It's in general, it's cool to see more TradFi type use cases being brought on chain, and obviously that chain being Hedera. And then it's really going to be up to whether these platforms can drive the distribution and the adoption of users to them. Hedera does feel like it's been built for more institutional type use cases. And so between platforms like Vols or this Forex trading platform, it's probably going to be a true test and testament as to how successful Hedera can be in terms of whether are these people able to attract liquidity, users, capital, etc. So yeah, excited to see how that turns out.
Yeah, and just to explain, FX is foreign currency exchange. When we talk about FX, that's what we're talking about. It is a multi-trillion-dollar market. It is absolutely huge. So even getting some of that market share could be huge. And you were talking about Hedera is almost purpose built perfectly for something like this. I know that the YieldFX team is also trying to allow you to get the yield opportunities that go along with some of these currencies. So you not only get exposure to the currency itself, but you also, their short-term treasuries, you get exposure to that. So you can get yield on top of the exposure to the currency. So that's certainly exciting. The other thing that I do have to ask the team about, and they actually reached out to me because I did an interview with them not long ago about doing an update interview, of course, because now that they have this Flex exchange, they want to talk about that as well. I'm curious if some of these assets will be DeFi ready, where you aren't just working in their walled garden, but you're going to be able to use those throughout the rest of DeFi, or use these assets as a medium of exchange. Because that's one thing that we haven't seen is some places we do have access to the yield, but being able to use the treasuries or the token representing the treasuries as a medium of exchange while you're getting the yield on top of being able to use and transact with it. So it's interesting to see what's going to come from it. And I am going to skip the next topic we had because it kind of flows into the last one that we had on the list, which is the Hedera Foundation framing the Hedera DeFi space as institutional grade. Now, that doesn't necessarily mean it's just good for institutions. It can certainly be used for retail, but it's that institutional grade. They put out a pretty in-depth thread explaining why they're institutional grade and the benefits of it. But I wanted to get your take on what they put out in their blog post and that X thread, just to kind of get an idea of how you're thinking about the strategies that we're seeing coming out of the Hedera Foundation.
Yeah, I think at a high level, when you look at the entirety of the industry right now, there have been doors that have been opened up from a regulatory perspective, like with the Genius Act, for example, and not going after banks and institutions for wanting to support and adapt to crypto standards or tokenization standards. and even new players or entrants that have entered the market around institutional adoption. So you look at Paradigm's entrance of Tempo, which they're doing in conjunction with Stripe. And Tempo is a layer one network that is a public permission network at first, very similar to Hedera. It seems like a very similar play to sort of how when Hedera initially launched, sort of what the anticipation of the market is going to look like. And it seems like now there is the ability for some of those things that Hedera had initially realized from the beginning or envisioned from the beginning starting to come into play and be possible with regards to institutional adoption. The market itself is heating up. There's this opportunity right now with that change that's taking place that's very concentrated and accelerated for Hedera to try and take advantage of that change as it's happening. And so I feel like it's all great in terms of the strategy that's being employed here and trying to capitalize on that change. And then again, like you said, I don't think it's detriment to the retail ecosystem. I think it complements the retail ecosystem incredibly well because ultimately a lot of those retail users are also going to benefit from these platforms and applications that are coming online that address institutions. I think this is such a weird analogy, but maybe it's similar to like when Uber first launched, it was black limos, and they over time sort of opened up the doors to a more democratized access version that everybody got access to with Uber X or Uber XL. And so probably a similar path to that. It might start with institutional adoption businesses at first, and then really start to become more and more open to everybody else.
Well said and well covered. So the last thing we're going to get into is some of the strategies we're seeing coming out of Hashport. What's your take on that?
Yeah, so Hashport recently launched a HBAR faucet. This is in alignment again with going back to retail adoption and making it really easy for retail users of either other networks or maybe retail users that are on centralized exchanges that want to start playing around with DeFi. The product that they launched was an HBAR faucet, so free HBAR for anybody who has an existing account or a new ecosystem account that they've set up in an ecosystem wallet like Hashpack. They go to this HBAR Faucet website that was launched by Hashport. They enter the account address there and connect their wallet, and then they're able to get some free HBAR to be able to use for paying for transactions on the network. And so that's going to be super helpful, I think, for everybody. I think phase one from chatting with the team is it sounds like it's this single application that exists standalone, but ultimately over time it's the ability for other applications across the ecosystem to be able to integrate that functionality into their application. And so no matter where a new retail user is finding themselves in terms of an entry point, being able to get some HBAR for free to be able to start transacting. So concrete example might be if Bonzo can implement that. Someone comes and brings an existing MetaMask account, connects it to Bonzo. Oh, hey, we noticed you don't have HBAR. Here's a modal that pops up that uses the back end of this HBAR faucet that was created by Hashport. So great first step, and big congrats to the Hashport team too for setting that up. I think it's gonna be really helpful.
I love that. You're using it just as a tool that you could potentially use in Bonzo as well. So before we move on to some of the yield opportunities within the Hedera ecosystem, I do want to say that Karate Combat has an event coming up at the end of the month. It's going to be on Halloween. It's going to be a banger of an event, but I know it's been a little while since they had their last event. It seems like things are going to heat up going through the end of this year and the beginning of next year, and people may have put their Karate tokens in DeFi and aren't really paying attention to it. Just make sure before the snapshot, which should be a few days before Halloween, that you get those into your Karate app so you can participate in that event. It's going to be a good one, as I mentioned. All right, let's get into some Hedera yield opportunities. So we're going to start off with V1 on SaucerSwap, and that gives you the full span of relative prices between the two assets in the pool, starting off with HBAR Da Vinci, where the APR is 39%, HBAR Sauce is at 16%, HBAR USDC at 12%, HBAR BSL 15%, HBAR Steam at 22%, HBAR Pack is at 17%, and HBAR GIB is at 5%. Moving on to V2, this is concentrated liquidity. We have HBAR USDC at 111%, HBAR HBAR X at 3%, HBAR Sauce at 29%, HBAR wrapped ETH, and this is the version that's coming over through Stargate. That's at 2%. HBAR Bonzo is also at 2%. And then USDC wrapped ETH, and this is the same wrapped ETH that I was talking about before. That is at 6%. HBAR Dovu at 134%. And then HBAR Link is at 11%. Now, like what we talked about in the beginning, one of the risks associated with getting yield from those liquidity pools is the possibility of impermanent loss. If you're not sure what impermanent loss is, there's plenty of explainers out there where you can get a full rundown of what that is. But if you don't want to deal with that impermanent loss, you can go to Bonzo. And for HBAR right now, you're getting about 0.6%, so low, but significantly higher than native staking. For USDC, you're getting 2.4%. Bonzo gives an extra kicker, so you're getting over 6%. Sauce is just over 1%. PAC gives you 0.7%. Grelf gives you 3.5%. NFT Launchpad Kabila is giving you just about 5%. So, Brady, looking across the whole DeFi ecosystem there, are there any strategies or yield opportunities that you're looking at that people should know about?
So nothing else major in particular. I do love that you go through all of the different opportunities that exist in the ecosystem. I'm really excited to see yield opportunities for majors as they start to come online for Layer Zero and Stargate. So, we have Wrapped ETH, and you cited some of those. I know that SaucerSwap is passing a proposal right now for additional incentives and rewards on, in particular, that bridged asset, but more wrapped majors being made available on Hedera, I think, is really important in terms of capturing new retail users that come over. And then obviously you need incentives for that. And so, I mean, I'll shamelessly plug again, we have Bonzo Vaults coming at the end of this month. And, those are going to offer more just raw yield opportunities for people with automations of their liquidity. And we do hope to support, a significant amount of those wrap bridge assets as they come online as part of like a strategic move to, make majors on Hedera from other networks a big thing. I think ultimately that's going to be like the biggest catalyst for adoption. So we'll stay up to date on that and probably do a dedicated one-on-one interview once that goes live and we get a little bit of traction.
Yeah, I'm looking forward to it. And that's the other thing. I want to get into talking about all the different staking rewards on here as well. There's opportunities across there. And then, the different pools that are going to get created around these vaults as well. I think that's going to be something fun we can cover. But let's get into the health of the Hedera DeFi space by getting into some of your metrics.
Perfect. Let's jump into it. So kicking things off, we have DeFi TVL, which is inclusive of liquid staking with Stater Labs. That's sitting at about 181.18 million in US dollar denominated value. Market's been very turbulent over the last month or so. And as prices change, obviously that US dollar denominated value and TVL is going to change. When looking at HBAR denominated value and overall TVL on Hedera, it has gone up by about 10 million HBAR. So sitting at about 1.092 billion, up from around 1.8 billion from last time. So still moving along steadily to the right, no massive influx or decrease, which I'd say is good given the market conditions over the last month or so. Jumping into monthly DEX volume. DEX volume has been up. Obviously, I think with the event that took place earlier this month, that was a big contributing factor to it. A lot of trading that took place will exceed in this month of October the DEX trading volume that we saw in September. So today it's sitting at about 237.87 million US dollars and 1.266 billion in HBAR denominated value. So in HBAR denominated value have already surpassed last month's, and we're only just slightly over halfway through the month of October.
So, Brady, just to clarify that, we're not looking at the trailing 30 days or anything like that. We're looking at just the month of October versus just the month of September. So the fact that we're already starting to exceed in nominal terms the amount of trading we saw last month is pretty impressive, huh?
Yeah, I'd say so. I mean, as it's going up, trading volume is going to increase, and unfortunately, too, as it goes down, trading volume increases as well. So I think in this case, what we've seen is probably a bit more of that prices going down and trading volume increasing. But overall, trading volume is good for the ecosystem. It shows that there's a significant amount of activity taking place. And yeah, we'll just have to watch it through to the rest of this month. But it is, as you said, it's only October 19th now, and we've exceeded in HBAR denominated value the amount of trading volume from last month.
Yeah, you have to look at the bright side. I look
Yeah.
fairly regularly. I'll take a look at Sauce buyback. So that's what SaucerSwap is buying back to put into XSauce essentially. And we saw the highest buyback ever when we had that liquidity event. And I think it was about $4,000 in just one day. And it stayed elevated while that trading volume on SaucerSwap stayed elevated. So it's something nice to just look at the brighter side. Let's move on to stablecoins. How are things looking there?
Yeah, so stablecoins, we break this out into two metrics. The first is the total value locked of stablecoins within DeFi on Hedera. So these are stablecoins that have been deposited into DeFi protocols, the two main ones being SaucerSwap and Bonzo Finance liquidity pools. And then the second metric here is the overall amount of technically tradable stablecoin liquidity. And again, today, USDC native on Hedera is this is sort of de facto stablecoin that is being used. And so when we look at TVL, we're sitting at about $15.45 million in stablecoin TVL. So that's of USDC on SaucerSwap and Bonzo combined. That's down from about 18.5 million, but pretty expected, I think, just given the recent events that took place, and overall still up over the past couple years, continues to grow. In terms of stablecoin liquidity, again, the amount of USDC that is in accounts or wallets that is technically tradable and usable within the ecosystem. The market cap for that sitting at about 87.46 million. We've seen a lot of volatility there up and down, as in with past DeFi corners. We've talked about how TVL is probably the better, more concrete metric to be looking at. But it is interesting that we are starting to see a pattern now with stablecoin liquidity. So even though we see pretty violent upswings and downswings, the trend overall looks like it is actually going up. The
It does.
downswings are becoming less and less and less, which is pretty interesting and actually really good to see.
Agreed. And now finally, we'll take a look at some of these staking rewards.
So liquid staking and native HBAR staking, liquid staking through Stater Labs with HBAR X is still sitting at 4.33%. And then with native staking, so staking an account to a Hedera network node, earning 0.018% on that.
Yeah, Brady, that kind of looks like bank rates at this point. So, hope
Checking account.
yeah, hopefully we'll get what Charles was talking about, and we'll get to that sweet spot where they fund account 800, and we get into that 1.5 to 2.5% range. I think that would be just fine, but I think it would be good to provide some incentives to the liquidity providers in the Hedera ecosystem for sure. All right, so if anybody has any questions and you want to interact with Brady and I directly, tomorrow at 3 p.m. Eastern, we're going to have DeFi Corner Live, where we jump on a space with the Head Starter team and the Meme Job team. We're there. You can hop on. Let us know what you think. If you think we're full of it, if you have any opportunities that are going on in the DeFi space, you can let us know about that. We love as much interaction as possible. But Brady, that's pretty much all I have. I know you guys have some swag coming out. Give us a plug.
Yeah, so we've got a swag store that is launching probably later this afternoon, but official announcement being on Monday. So we're really excited about that. We worked with a designer that we met through Connection who's based in Milan, and he's done a number of different pretty large designs for various individuals, companies, etc. There's three collections that are released. So there's like a basics founders collection, which is sort of just the standard Bonzo logo on a number of pretty high quality items. Then there's the NFTs collection, which is some of the NFT art from the Bonzo NFTs. So the various Bonzo monkeys that are available. That was like a high in demand in the survey that we did. And then a vaults collection in anticipation of vaults going live at the end of this month, and some really cool designs that came out for vaults. So yeah, definitely keep an eye on the Bonzo underscore finance handle on X and get a link to that swag shop once it goes live, and check out some of the items that we've got coming.
Oh, well, sounds good. And if anybody out there wants to do a deeper dive into things that are going on in the Hedera ecosystem, you have my weekly update. You can jump into that. I also have a series of all of the builders called Built on Hedera. If you're interested in anything that you've heard on here, you can usually find something on my YouTube channel. But Brady, things are going to be up and down over the next few weeks. I'm not sure the next time we're going to actually have a DeFi corner, but thanks for hopping on now, and we'll see you again soon.
Sounds great. I'll check you out tomorrow.
As we've been covering, the SaucerSwap app beta is live, and thus far it's exceeding my expectations. To get involved, the first step is to go to the SaucerSwap Discord channel, then to channels and roles. Tap the notification at the top to join the mobile iOS beta, then scroll down a bit in the channel and tap on mobile beta. You'll see an announcement post that contains a link. Tap on that. If you already have the iOS testing app, TestFlight, it will take you to a page to open the SaucerSwap application. If you don't have the TestFlight app, I believe you'll be prompted to get it. Tap Open and create or import your wallet. I chose to import. Now, I would use an account created specifically for testing purposes only. There are 4 icons across the bottom of the app: Home, Swap, Stake, and Explore. For my testing, I wanted to trade from USDC, so I associated the native form of USDC, which was smooth. Then I bought some XSauce using the app. SaucerSwap nailed the simplicity needed for the perfect onboarding mechanism, and though trading and staking is the main functionality now, that will expand to all SaucerSwap services currently offered on the website in the near future. Then we have some new features that are going to be added in Q4 of 2025. We're going to get limit orders, and then in 2026 we're going to get perps. Thus far, I couldn't be more impressed with what I'm seeing, so go ahead, give it a shot, and get the word out.